And it's another TCS video. Hello everyone, Monty here, market analyst at IG. TCS stands for Technical Cheat Sheet, where we take a look at key technical indicators that we can formulate the overview and prep those strategies for when it holds, or when it comes to key indices, especially on the daily time frame, for whenever that overview manages to fail, like we saw at the start of April. Also going to take a look at levels, both daily and weekly time frame, though you don't necessarily need to plug and chug. We got the daily market, IG's daily market report releasing Monday through Friday, in case you're interested in the levels on any day of the week, and also for the weekly time frame, IG's weekly market report releasing every Monday. Also releasing on Monday, IG's weekly sentiment report, though here we are going to take a look at where traders stand for this particular market, and they're on exact opposite ends at the start of this week. I'm not making it up. It's just what it was at the start of this week. Also fundamental considerations, given it is a week where we've got quite a number of items and on multiple fronts. It's going to get started. Dow 30 key technical boxes, by the way, generally neutral where they aren't conflicting. Price beneath all its main short-term weekly moving averages, but above all its main long-term ones. Neutral DMI, RSI, as well as when it comes to the Bollinger Bands with price in the middle. But you take a look at the ADX reading, it was in trending territory, still in trending territory, but let's not forget it is declining and it's not far off falling out of it. So this isn't a situation where you're just looking and go, oh, it's trending, I'm just going to hop in and go with the trend. Beware, this is a case where when the ADX is coming back down, it means that trend is getting exhausted. For an overview on the weekly time frame, we're still sticking with the bull average. Now, I get the pullback at the start of April. We're incorporating a lot more historic price action, which you don't get on a daily time frame. That's why on the daily time frame, it's not bull average, even if we did see a bit of gains, which we'll get to in a bit. But it's managed. It's thankful that in this case that it can incorporate some of that historic pricing data, and that means that when it comes to both conformists and contrarians, for conformists, it's either buy breakout off the weekly first resistance, buy after significant reversal off the first support. But here's the thing: even though these are weekly levels, right? And there's quite a gap between the RSP and the first. If price, for whatever reason, reaches for example, the first resistance or the first support right before a significant fundamental, like the FOMC policy announcement, it doesn't mean that these levels are going to hold. Market makers are going to withdraw. Now, this is a bigger problem when you get to the daily time frame, but it is still something you want to know on the weekly. Should price reach those levels just before a fundamental event? Otherwise, absent that, you can go for either conformist or contrarian, which they did outperform. Sell breakouts outperformed at the start of April because the overview was bullish at the time as well. More so. I mean, a lot of technical boxes were green at the time, and then you had the pullback. And when the pullback happened, it was contrarians that outperformed. Whether or not conformists actually were able to trigger, because it wasn't always via a significant reversal off the first support, and that's the whole point, right? When you're working with either a channel or with a bull average overview, you're not looking to just hop in and go for a buy off the first support right away. You want to wait for a significant reversal so you don't get stopped out in the event of a move even lower. But contrarian sell breakouts did have their moment in the sun. But then afterwards, as soon as price managed to find its footing, find some support, it's been a bit of a struggle, and sell breakouts have obviously been at risk. RSP to first resistance, remember, weekly time frame, so there are going to be larger 489 points, where first resistance to stop loss, depending on where you set your take profit, we want to go for a risk-reward ratio, ideally more than 1-to-1, right? 1-to-2, if not 1-to-3, but you're looking at around 244 points. What about on a daily time frame? Now here, it's generally a story of neutral technical boxes, with the exception of the DMI. I plotted all this over here. You can see the negative DMI, decent enough margin over the positive DMI to say that it's in negative territory. ADX, by the way, there are those who take it between 20 to 25 as being trending. I like to be on the safe side. I'm going to take it 25 and above, and that means for now, not showing a propensity to trend. You add it all up and you put it together, and it's a bit blurred between cautious consolidation and when the volatility first struck, the overview shifted to consolidation volatile, and breakouts managed to outperform. They usually outperform whenever you have an initial burst of volatility, but then all of a sudden the levels start to adjust because the levels are calculated based on recent history. So if the levels are adjusting, that means that in the beginning, you'll see breakouts do very well on that initial breakdown, for example, or that initial volatility. But afterwards, once the levels start to adjust, they start to struggle a little bit in terms of finding follow through. But here's the thing. Now, conformists would be selling first resistance via significant reversal, buying first support after a significant reversal. Contrarians are those of you going, no, I think this isn't going to hold. We're going to move to a new zone. I'm going to go with the breakouts off the first resistance and first support. Remember, these are daily levels. They're much narrower. And in a week where we got a lot of fundamental items. So two things to note here. First off, traders prepping for fundamental items this week that can easily push things past daily levels. I mean, weekly, it's a bit more difficult, but daily, especially when the news is about to break and market makers withdraw their volatility steady and the volumes get light on the exchanges, on the markets, it means it's very, very easy to kick it in one direction or another. And that means that daily levels usually don't stand much of a chance. So if we're looking at technicals alone, cautious consolidation, you factor in any of the fundamental events that could kick things past, you definitely want to keep things ready and at least keep an open mind from a contrarian standpoint. And the second thing is that an overview shift may not be that far off. So it was bull average in the past. We had this pullback. It shifted to consolidation volatile. Now that levels have generally caught up to some extent, it's a more cautious consolidation. But is it showing signs of resting here, price? And that's not the case. And that means that as a result, you may have to be ready to shift to a new zone. Now, how does it happen? A lot of times you've got consolidated moves, just session after session, bam, bam, and then you have a move to a new zone. I'll show you guys in the chart what I mean by that, but that's a lot of times how it usually works. And what that means is that if we're looking at it from day to day, again, you have your stop loss ready if you're going opposite, but you just want to be very cautious going opposite. And that, once we go to a new zone, there are going to be that 1 or 2 days where contrarians may outperform. And the fact that we've got fundamental events, it might cause, even though it's not technical in nature, it might cause a move to a new zone. And that's the reason why contrarians are going to be at the ready, depending, of course, on how much the results veer far from expectations. So RSP to first resistance, 260 points. Again, narrower than the weekly, which is why you got to be cautious, as well as from first to SL 130. As I mentioned, you don't need to necessarily plug and chug because it is going to differ from day to day. So if you're looking at this on Tuesday, Wednesday, Thursday, the difference is there is going to be a slight difference, and that's the reason why feel free to reach out with regards to getting IG's daily market report to get the levels for this, as well as for key indices, key commodities, gold and oil, and for the FX majors. Let's go in and take a look at sentiment, though. Exact opposite. IG clients, outer circle is for the start of this week, inner circle start of last week, dropping from 64 to 61%, whereas for COT speculators, dropping from 70%, they were in heavy buy territory, to 61% on a drop in long, as with a simultaneous increase in shorts. Going to go ahead and plot this onto the chart. Now the dotted lines correspond to the left axis as percent long. So whenever percent long as percentage buy. So whenever you see the dotted line go above this red dotted line, the red dotted line is 50-50. So if you see the green or blue dotted line go above the red dotted, it means they're now majority buy at this point in time. Whenever you see it below, it means they're majority sell. Blue dotted for IG clients, green dotted for institutional or COT speculators. And what you can see over here, what I really like about, starting with the green dotted line for COT speculators, what I really like about it for the Dow 30 is you notice that there's a much higher correlation with momentum and a lot more to do with positioning and trading versus what we see with the S&P 500 and the NASDAQ, where it had a bit more to do with hedging and so on and so forth. I do like the fact that, we had this move over here. They went with it. The price went up. They shifted to majority buy, took it up into heavy buy territory. And then over here at these levels, you saw them kind of start to get out. There was a little bit of move, little get out, get back in. No, wait a minute. And then all of a sudden, you saw a bit of a divergence over here. And I did point it out in the weekly sentiment report before that are they getting a little bit impatient at these levels? Does this mean that the gains that we see from here on out, and we could see gains, they're not really going to stick, so they're positioning for a move opposite, and indeed they have. Now, this move happened over here. You saw them come back down over here. We're going to have to wait because this latest figures are from COT report last Friday, positioning as of last Tuesday. They're going to have to wait for the report this week to see whether or not the gains that we saw is going to entice them to say, okay, let me go and get back in, or no, are they going to continue to pull back out? So you can you'll see the latest results in next Monday's IG weekly sentiment report for those of you that are interested. What about when it comes to IG clients? Prices went up. You saw the longs get out, shorts initiated, and they went into extreme sell territory, and they stayed there for quite some time, trying to work their way out when prices got up to these levels. Now, here's the thing. When you have a back and forth, it gives a chance for a lot of traders to work their way out. Even those that have been squeezed a little bit with those sell positions, if they still have the financial firepower, they're going to try and average their way out. And indeed, they tried to do that at these levels. So this was seen as, even though it moved higher and it made a fresh record high, it was, the way it happened was in such a way that it provided a relief to a lot of these traders and these range traders to be able to work their way out of it. And of course, this moved right over here, and then you saw them drop. And I'm going to zoom into the daily time frame to show you guys how close it got, because when you look in the weekly time frame, that's an average for the whole week. If you look at the daily time frame, they weren't that far off from shifting from majority sell to majority buy. They were sell this whole time, and that means that during this period, the past 3-4 months, they were beneficiaries of these moves. Prior to that, they weren't, because when you're range trading the move, the one thing you don't mind a move from a lower price to a higher price, but you don't want it to happen clean and fast. You want it to be slowly and gradually so you can average your way out. And that's kind of what the situation was before, where it just kind of went too fast that they weren't able to average their way out. They had to wait until things settled at a higher price, and then they go, okay, let's try and average our way out at these levels. And being majority short at these levels has been a plus for them, because if the market is range bound or pulling back, then it's okay to be majority short, because then you can work your way off of the resistance levels. And if it starts to trend lower, the shorts can start to unwind and the longs can start to initiate, and so on and so forth. What about when it comes to fundamental considerations? Look, in terms of flows, you look at the items out of LSEG or Bank of America's flow show, so on and so forth. It's been a story of generally relatively contained outflows out of equities in general over the past 4 weeks. Nothing to really worry about just yet. And when it comes to the Dow 30 in particular, we didn't get sizable percentage moves last week. We did get it out of the NASDAQ 100 and the S&P 500, the ones that have a heavier tech weighting. We did see some big moves, a decent recovery last week, and a big plummet the week before that. So when it comes to the Dow 30, because of its relatively lighter tech weighting, it just means that it's going to be relatively resilient should it be about tech or not tech. And given we do have a couple from big tech, Amazon and Apple, Amazon on Tuesday, Apple on Thursday. You also have some semiconductors. You got AMD as well on Tuesday. But generally speaking, I got to say these two, though, they are components of the Dow 30, but their weighting is much smaller compared to both of these stocks on the S&P 500 and especially on the NASDAQ 100. In fact, both of them combined, they get close to McDonald's, who are also releasing their figures this week. I did an earnings preview on that, as well as Coca-Cola, that's going to be releasing their figures this week. What about when it comes to data? So that's one front. You got the earnings, which this is after last week where Alphabet kind of came and saved the day after some disappointing drop when it came to MENA. But in terms of data this week, you got PMIs, you got plenty of labor data leading up to Friday's non-farm payrolls. And this is all within the context last week of you had hotter pricing data, whether it's PCE for the month of March or even for the first quarter. U of M's 12-month consumer inflation expectations revised a notch higher, and at the same time you had GDP was advanced GDP a clear miss. That kind of brings in that whole stagflationary theme. I mean, it's a bad word as an economist. If I say stagflation, I got to put money in the swear jar, but it's not really the combination you want to see, and as a result, investors, traders are going to continue to note data, not just this week, but in the coming weeks, to see whether or not we're moving in that direction where pricing remains sticky and hot and not where the Fed wants it to be, but at the same time, the economic indicators and some of the other data starts to worsen. And speaking of the Fed, you got FOMC this Wednesday expected to hold. If there was a dot, there's no dot plot this week. We have to wait till June. But if there was a dot plot, I think it's fair to say that it wouldn't be 3 rate cuts this year. It would be less than that. And so for market pricing, courtesy of CME's Fed Watch, looking at first rate cut via majority September, if not, depending on what happens on Wednesday, depending on the data, how it might push out a first rate cut from September to potentially November. And also the matter of, in the past, at the start of the year, we were looking at 6, some of them were saying, 7 rate cuts. And now where we stand in terms of market pricing, close to potentially just 1 cut. There is a door open. It's close to 50-50, a coin toss on getting a second one, but it's very, there isn't much of a margin there. And no doubt, what comes out of the FOMC in terms of the data, that can obviously tilt those market pricing. So do hope you enjoyed this video. Good luck out there.